What are exchange-traded funds, ETFs, and how do they work? Hi everyone, and welcome back. In today's video, we're going to explore exchange-traded funds or ETFs and how they work. If you're looking for an investment option that combines the benefits of mutual funds and stocks, ETFs might be something you want to understand. Let's get into the basics. What are ETFs? An exchange-traded fund or ETF is a type of investment fund that is traded on stock exchanges, similar to how stocks are bought and sold. Essentially, an ETF holds a collection of assets like stocks, bonds, or commodities and aims to track the performance of a specific index, sector, or asset class. For example, an ETF might track a popular index like Nifty 50, meaning it holds the same stocks as the Nifty 50 index in the same proportion. This makes it a way to invest in multiple assets at once without needing to buy each stock individually. How do ETFs work? ETFs work by pooling investors' money and using it to buy the underlying assets in the fund's portfolio. The key point here is that while ETFs function like mutual funds in terms of diversification, they trade like stocks on an exchange, meaning you can buy or sell them throughout the trading day at market prices. The price of an ETF fluctuates during the day, depending on how the underlying assets perform. So, if the stocks or bonds the ETF holds go up in value, the ETF price tends to increase and vice versa. Benefits of ETFs. 1. Diversification. Since ETFs hold a basket of assets, they provide diversification, reducing the risk compared to investing in individual stocks. 2. Lower costs. ETFs generally have lower expense ratios than actively managed mutual funds because they are passively managed. This means lower management fees and, ultimately, potentially higher returns for investors. 3. Liquidity. Since ETFs are traded on exchanges, they can be bought and sold throughout the day. This provides flexibility compared to mutual funds, which are only traded at the end of the trading day. Considerations when investing in ETFs. However, there are some things to keep in mind. Although they are lower cost, ETFs still carry risks depending on the assets they hold. Additionally, the price of an ETF can fluctuate based on market conditions, so investors should be aware of potential volatility. Conclusion. In conclusion, ETFs are a flexible and cost-effective way to invest in a diversified portfolio of assets. They combine the features of mutual funds and stocks. But like any investment, it's important to consider how they fit within your overall strategy. If you found this video helpful, be sure to like, comment, and subscribe for more guidance. Thanks for watching. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.